The information provided in this video is for educational purposes only and should not be considered as financial advice. Always do your own research before making any investment decisions. Everybody is looking for the next big move in Bitcoin. Buckle up because we are diving headfirst into the wild world of Bitcoin. Today we're using the Elliott wave theory to try and make sense of its recent price movements. For those unfamiliar, the Elliott wave theory suggests that market prices move in predictable patterns driven by investor psychology. We'll explore both bullish and bearish scenarios, examining key support and resistance levels along the way. So let's break down the charts, analyze the trends, and see what the Elliott waves might be telling us about Bitcoin's future. Let's talk about Fibonacci, not the Italian mathematician, but the sequence influencing financial markets. The $66,500 level is key for Bitcoin. It was major resistance in 2021, now potential support. These levels can be stepping stones or pitfalls for Bitcoin's price. Now, let's talk trend lines. These bad boys are like the roadmaps of the market, guiding Bitcoin's price action. Connect the recent lows and you'll notice a beautiful uptrend line, suggesting that the bulls are still in control. As long as Bitcoin's price remains above this line, the path of least resistance points upwards. But hold your horses. Don't mistake this for a one-way ticket to the moon. Keep your eyes peeled for any signs of weakness, such as a break below the trend line or a series of lower highs. Since its September 6th low, Bitcoin has been on a tear, rallying like a champion and giving hope to even the most jaded crypto enthusiast. This surge has been nothing short of impressive, but the question remains, is this the start of a sustained bull market or just another temporary blip on the radar? If this interpretation holds true, we could see Bitcoin's price soar to new all-time highs in the coming months. While the bulls might be feeling optimistic, it's important to acknowledge the potential roadblocks ahead. Remember that pesky Fibonacci level we talked about earlier, the one at $66,500? Well, it's not the only Fibonacci level standing in Bitcoin's way. Another critical resistance level looms large at $67,341, representing a 61.8% retracement of the entire 2021 bull market. Breaking through them will require significant buying pressure and a surge in investor confidence. So, while the recent rally is encouraging, it's crucial to stay vigilant and watch for signs of weakness as Bitcoin approaches these key resistance levels. Now, let's put on our skeptical hats for a moment and consider an alternate Elliott wave count. Some analysts argue that Bitcoin's recent rally could be a bear market rally, a temporary surge within a larger downtrend. This interpretation suggests that Bitcoin is currently in the midst of a fourth wave correction, a temporary respite before the bears regain control and drag the price lower. If this alternate count proves accurate, the recent rally could be nothing more than a bull trap, luring unsuspecting investors into buying before the next leg down. That's why it's crucial to consider multiple perspectives and never rely on a single indicator in isolation. As I'm writing this, Bitcoin is experiencing a pullback. This is completely normal after a strong rally, but the question is this just a healthy correction or the start of something more sinister? One possibility is that Bitcoin is currently undergoing an ABC correction, a common pattern within Elliott wave theory. However, there's also the risk that this pullback could morph into a full-blown bearish reversal. The key takeaway here is that uncertainty reigns supreme in the crypto market. So there you have it, folks. We've explored the bullish and bearish scenarios for Bitcoin. identified key support and resistance levels, and noted the market's inherent volatility. While the recent rally is encouraging, it's crucial to manage your risk. Stay informed and never invest more than you can afford to lose.